Good evening, ladies and gentlemen. Thank you for being with us for this Danielcode webinar and Friday evening where you folks are. So we've got a long show today. So do fill up your coffee or your glass of whiskey or whatever you have on Friday night, because we've just got a whole lot of very interesting stuff to get through. So good evening to you, and thank you for being with me. Hello, David. Oh, here's all our team. Another day. Yes, good to see you all, guys. It's like a family reunion here. Wonderful. And also, good morning to our members and guests in the Southern Hemisphere, Australia and New Zealand, where it's Saturday, excuse me, morning where I am, and Saturday afternoon, early afternoon in New Zealand. Lots of excitement here because we've seen some drama in the political scene where the Victorian government, we have state governments here as well as federal government, as you do in the States. The state of Victoria turfed out its Liberal government after one term. Liberal here is something akin to Republicans. It's the more right wing of the two parties. The major parties in Australia are Liberal and Labor. Liberal sort of the right wing, semi-Republican. Labor is Labor, which is Democrats, but it's really the party of the trade unions. And in truth, both parties are very much centre of the road. We don't have anything as right-wing or exciting as the Republican Party in America. But it's been an act of faith that political parties get 2 terms at least. Thank you, Terry. Monitoring my sound here, says it was good. It's been an act of faith that political parties get 2 terms when they're a new government, and that's all getting thrown on its head down under, with the Victorian government being turfed out after 1 term. And a great drama in Queensland where there was a new government there 3 years ago, had a massive majority. The opposition only had 7 left. As they said, you could have had a cabinet meeting in a taxi. Completely destroyed the Labor opposition, and the Liberal National Party has been, in Queensland, has been so on the nose they got turfed out in 3 years after their first term, and apparently about the same thing's going to happen to our Prime Minister, who's in all sorts of trouble. And it's interesting that there have been incredible policy mistakes by this new Liberal government in Australia, with unbridled attacks on the middle class and the lower earning class, with things like lifting the price of petrol. Petrol in Australia and New Zealand is very, very heavily taxed. And we were paying about the equivalent of $8 a gallon, a bit more, $8.40, $8.60 a gallon, which to you Americans would raise a shriek. And so it should. These are necessities of life. But we had our treasurer saying, well, you know, poor people don't drive, so it won't worry them. So those sort of gaffes largely went unnoticed. But what blew the lid off is the new Prime Minister, Tony Abbott, who's a pretty good bloke, but apparently doesn't have his head screwed on too well, decided he was going to bring back knighthoods and damehoods, and of all things, he on Australia Day 2 weeks ago, he created Prince Philip, the Duke of Edinburgh, who's the Queen's consort in England. We're still part of the British Empire, of course. He created him a knight, which was just ridiculous. He's not even an Australian, and getting an Australian knighthood would rank, I would imagine, about 127th on the list of Prince Philip's awards and gongs. But the public really up in arms about that, and it's brought on, there's going to be a spill of all cabinet positions next week. So we've got some drama and fun here for a change in the political scene. Anyway, we love that. Chaos is great. Yeah, David, $2.40 for petrol. Goodness, isn't that great? Anyway, that's been marvellous. So we've got a whole lot to talk about, folks, and let's get the show on the road and see what we have for today. Here's our compliance statement that I'm required to show you, and I want you to just really be aware of the second paragraph in particular about hypothetical performance. All of this stuff that research we're doing on FractZen is a computer program written for us largely by our partners, Trade Navigator. It's very, very good. It allows us to scan vast amounts of data over long periods of time, which you couldn't possibly do without the computer program. But like all computer programs, it has certain assumptions. One of the assumptions it has is that the market is always liquid and you get filled at exactly the price you want to get filled at. There's no slippage in the computer program. There's no provision for brokerage fees. There's no provision for bad fills or anything else. It is purely hypothetical. So you must always bear in mind that when we're talking about FractZen in particular going forward. For those of you who didn't join us for the tutorial last week, very briefly, this is what FractZen is about. It's our new short-term trading program that can trade sometimes twice a day. Other times it can run for 4, 5, 6 days. And we're very excited about that and spent a lot of time on that lately, but I don't want that to overshadow everything else that we are doing. And for the rest of you who are not interested in FractZen, we've got a great deal of material for you today. But basically it's our first FractZen's our first fully auto trade program. It's really pretty much a set and forget solution. You just have to occasionally shut it down to do Windows upgrades and what have you, but if you are running on a Trade Navigator VPS, they'll do that for you. Now we've got a large number of you doing trials on FractZen futures, and there's a few things I want to just run through at the beginning of this tutorial with you. We're not going to spend a whole lot of time on this today because we want to talk about lots of other things. First of all, I want to show you the January results, and I want to talk about ups and downs in trading returns, which I'm going to do shortly. A couple of questions. First of all, there's been the stop loss question. With some of you in FractZen Pro trials, the stop loss is not appearing when the order is placed. Now, Chuck, thanks for that email that you sent. I appreciate that. I also got that direct from Trade Navigator. Some of you have a version where the stop loss is not appearing in your orders list until the entry bar is completed. In fact, the stop loss goes on as soon as an entry's changed, as soon as an entry's made. It's just not showing there until that bar's completed. We'll be running the upgrade for that. It's simply a question of ticking a box in the relevant platforms. That's going to, thanks Terry, that's going to be done I think on when the end of day data goes out, probably on Monday night. You guys, you won't even see it, but that stop loss, the box in the magic server will be ticked, and you, for those of you not seeing it already, you will be able to see your stop losses going on as soon as the order is created. We had a question from Brian about manual intervention. What can you do in the FractZen program to override what's happening in there? And the answer is not much, because we don't want you to. But what you can do at any time is you can flatten any position that you're in that you're not happy with. And if you have a look at Terry's video under the FractZen tab at the Danielcode website, you'll see some orders there, I think, Terry. And there's next to them, there's the letter F for flatten. You can just click that, and that will flatten the position, any position that you're in. Or alternately, you can actually create a reverse order, which will get you flat. But that's about all you can do. We don't want you intervening in the program unnecessarily, but yes, you can at any time flatten the position. Brian also raised the question of pyramiding, which is a interesting procedure. It's more often used in stocks that you'll buy at a position as the market improves. You'll add to that position, and with FractZen and vice versa on a short. If you're in a short, it'll keep creating more sell signals as it goes down. And pyramiding is when you add additional contracts as you go. Now, that actually is in the FractZen Pro program. We haven't switched it on for any of you, and you know, you require pretty large accounts to use it, particularly if you're trading futures, because every time you add a position, you're up for additional margin. But there will be some people who are very interested in using that tool, particularly people who are prop traders or who have access to large accounts, and I'm going to show you how that impacts the trading later on today. I mean, it is stunning if you've got the capacity, the account size to do it. The other thing I wanted to talk to you about is this last item on the list, one-on-one training. I'm going to show you today, and I have been showing you for months, the strength of these blue line trades and these plus trades. And I'm going to show you some more of them again today, but I know that for most of you, you subscribe just to the TO3 signals, and that's enough for you. But there are a significant number of people now that are starting to subscribe, either are already subscribed to the plus signals or have subscribed to the website Pro package that gives you all the signals, the TO3s and the blue lines and the plus. And the money-making capacity of these additional signals is absolutely outstanding. And of course, I want you people to do as well as you possibly can. If you can get your head around everything that the Danielcode has to offer you, you should be amongst the best traders in the world, and we've proved that over many years. But I suspect that most of you don't get your head around it all. So what we're going to start doing is, for those of you who are subscribed to the plus signals or are subscribed to the website Pro package, and you're getting those blue line signals and the plus signals, I'm going to make myself available for some one-on-one training with you. We'll probably look at doing a half-hour or a 1 hour video training session with you. Now, in there, I'm not going to teach you the stuff I teach you at tutorials. That stuff is very advanced and takes time. And if you want to really learn all about everything there is to know about trading, I hope you'll come to a tutorial. We're trying to get one organized for April in Los Angeles. But I will be more than happy to have a free one-on-one session with any of you who are getting the plus and blue line signals, in the hope that I can show you, talk to you about trades, your trades that you're in, and show you how to get the most out of that. In addition, now that's free, in addition, anyone else, if you'd like to have a half-hour one-on-one session with me by video, and we can do it in this application we have here, go to meeting. If you'd shoot Terry an email, we'll be happy to organize that for you. And my aim, of course, is to see you people doing so well and getting everything out of this program that you can. And I think the reality is that most of you are not using this to its full potential. I've got a number of trades today that I want to run through with you. Just these are trades from last week. This week, actually. It's Saturday here for me, but Friday night for you, most of you folks. I just want to very quickly show you all of these trades that have been going on. This one here, this is Aussie JPY. This is a blue line trade, and I've talked to you before about this, that these are the ones I encourage you to hold. Use your trailing stop based on the Danielcode 533, the fast stochastic. Use a 2-bar trailing stop until the stochastic gets overbought, and then go to a 1-bar trailing stop. And I'm going to show you a few variances. So here was a pretty simple, straightforward trade. It closed $680 per one contract tonight. Here's another one. This is a Euro GBP. Now, this is a TO3 trade, and these are the subtleties that I'm going to try and share with you. That a TO3 trade and the plus trades are different to the blue line trades because there are some characteristics that they haven't met. In this case, in this cell shape here, It hadn't reached an upper blue line, so it couldn't be a blue line signal. It was a TO3 signal. But if you have a look at the stochastic, if you have a look at our fast stochastic, let me go and get the dreaded spotlight. Here it is. If you have a look at our fast stochastic down here, you can see this was in the perfect position to give you something like, and this is a 533 stochastic, so it is suggesting that you're going to get a minimum of 3 to 5 days down. So there were good reasons, if you thought about it that way, to hold this trade for longer than exit first profitable close. Now, if you wanted to exit first profitable close, which is what it says on the website, that's fine. You had a nice trade, but I'm really thinking of the people who want to do more with their trading, and you can see a good argument there why there was a good case to hold this trade a bit longer, and that was pretty nice. Here's corn, same thing, straight blue line trade. You're still in that trade. You now got the stochastic has come. You've been on a two-bar trailing stop all the way up here, which means your stop was under the lowest of the last two completed bars. You can't do this stuff until the bars are completed. And in this case, you got here, this was before today's trading, you had two inside bars, your stop was below the lowest of the last two under there, didn't get hit, and you got an outside bar today, which suggests there's a bit more in this trade. Now, if you have a look what's happening here, there'll be some stops above this reversal bar here, and there'll be some stops above this high bar here. And that's where this market's going. Markets run to the stops because that's where there's liquidity. These are the sort of things I'm going to be able to talk to you about when we get around to doing some of these one-on-one training sessions, that we can look at the trades that are current, the trades that are coming up, and talk about what are the best options. Here's one that's pretty interesting. This is a chart straight off the Danielcode website. You should just be, dwelling on these charts. The most amazing thing about the Danielcode are these numbers, and it's what I found to start with, and nothing's changed. We've developed all sorts of other programs and products, but the most amazing part of the Danielcode is the fact that these numbers that are created by the Danielcode are just, they're not numbers anyone else has ever heard of. I invented them. I got them from the book of Daniel, chapter 12, and there's a video up on the website called Live at the Springs for those of you who want to know how the maths worked out. I've been completely open and told you all how I do it, but it is extraordinary. So here's your nice crude oil trade. There was your blue line buy signal. You wanted to be holding this trade all the way up here with a two-bar trailing stop until you got to an overbought position, which happened up here, which means that you'd have a one-bar trailing stop, and then we got a TO3 sell signal. So the question is, did anybody, apart from my friend David Webb, who's mad on these black lines, see that the black line was a really, really good place to take profits? Now, the black line will stop a trade. It's an extraordinary thing, and we see this time after time after time. So when we had this big run-up day here, and it hit this black line with absolute precision to just a matter of a few ticks, and the stochastic was already overbought at that stage, was that a good place to take profits or take some profits? And the answer is a resounding yes. It always is. One of the techniques I wanted to just mention to you, and I'll talk to you more about, is how to do that. Now, if you're just trading one contract, you can just simply tighten up your stops. If you're trading more than one contract, for these decisions that are not clear-cut, because they're probabilities, the market could have made that target recognition at 54.20, and it could then have roared up. The probabilities against it because the stochastic is already overbought. But you could have a technique I often use. I'll close out half my position at these key points and leave the other half open with a tighter stop to protect some of the profits in case the market just keeps going, which it can do. So remember, we're always here, we're dealing with probabilities, not certainties, and that's a technique that we can use to do that. So you can see just a ton of money in this blue line trade, $9,000 in the upside and another $1,200 in the TO3 sell. Here's copper, similar sort of thing. Here's a blue line trade, ran up to here. There was your stochastic. It wasn't quite overbought, but I have to tell you it was close enough to me. It was at, we were looking, 80 would be overbought. It was at 78.33. Those of you who've done tutorials will know that I always say 78 is close enough for me. So we stopped out on a 1-bar stop there. It may indeed have more upside, but nearly $2,000. And this is all this week, folks. There's just been a ton of money. We've made a ton of money on our trading this week. This is our standard stuff. Here's coffee. We want to talk about softs today. Coffee is one of the softs, also called an agricultural product. And there we had a big TO3 sell and $2,000 standard TO3 sell. Stochastics in the middle of nowhere wandering about. And we had that big push down. That tells you that's an exit market on close, which we did for nearly $2,000. 3 days later, we got a plus buy signal. You could have exited right here at the first profitable close and made $375, or you could have had regard to the stochastic and said this thing probably has further to go, in which case you could have at the close today had nearly $1,200 from this trade. And these are the sort of choices I want to talk to you traders about, particularly the ones of you that have well, I'm happy to talk to any of you, all of you. You can all do very well by having a one-on-one session with me, and we'll see how many of these we can get through to make sure that we keep you up to date and talking to me about your trading and what we can add to this profitability, because the program's sure creating it, but I don't think a lot of you are getting it all. Here's a sugar trade from all the way down to here. Now this is the absolute standard. This is a blue line trade. I've been talking for months now about these are the ones to try and hold with your trailing stop all the way down. This little up bar here didn't trigger the stop because there's a gap in there, so the true high of that bar was actually the close of the previous bar. It did not get hit. These are the little things I've talked to you about. You may not remember them all at once, so we were going to talk more about them in these one-on-one sessions that we're going to do. Big whoosho down here. Look where it hit. 1411's the blue line. It hit it almost precisely, just within a few ticks, and it ran back a little bit. That is absolutely perfect target recognition, and that is an indication that that's the end of the run. On that same day, you had a blue line buy. It wasn't elected, and in fact, it doesn't get elected till over here. But the fact that you had target recognition, this perfect hit on the blue line, a little pullback from it, and a blue line buy signal telling you this market was ripe to turn, was really good argument to either get out at the close of that bar or at the very least tighten your stops and protect profits. Now, sugar's a tiny contract, and $1,700 is just a very, very big trade. Absolutely straightforward, standard blue line trade. I've been driving you mad talking about it, I know. Here's silver. We're going to get into a couple of issues that are just a little bit more complex here, and we're going to finish this session in another couple of charts with a really difficult chart that I wanted to show you just quite how that was the best way to handle that. So here's silver, standard plus sell signal here. Inside bar the day before. You can, if you want to, enter at the low of the inside bar minus 2 ticks. I encourage you not to do that, and I actually enter at the low of the bar before the inside bar at its low minus 2 ticks. You do give away a bit of money, but it's a much safer entry. If you're buying and selling highs and lows of inside bars over a period of time, that is a negative strategy, which is why we use this particular Danielcode way of entering after inside bars. But that was a plus sell. $1,700 for the simple act of putting on your order. You didn't have a profitable close. This is the bar you entered on. no profitable close, wait for the next day, exit the first profitable close. You're out today with $1,700 per one contract for very little work. This is a bit more complex. This is gold, and it's just sort of been gently wandering its way down, and for Friday we actually had a plus buy signal for gold. So your buy order was above this previous day's bar here, but we also had a sell signal, a plus sell signal for silver. And I've said before, gold and silver and the Huey are so highly correlated that a signal for one market is executable in any other market. So if you've been thinking about correlations, you'd not only have put on your buy signal there, you'd have also put on a sell signal underneath this low, and that's because there was a sell signal for silver, and these markets are so highly correlated that a signal in one can be executed in any other. And for those of you who thought a bit about correlations, today gold rewarded you with $2,280 profit, which was pretty nice. Here's the Russell, and I promised you I'd finish off with a nasty trade because the equities haven't been entirely straightforward this week. And this is the Russell, and you're going to see exactly the same thing on the Dow or the S&P or the NASDAQ. Remember, these markets are also correlated, all of the US equities and the DAX, that a signal in any one can be executed in any other. And here I'm showing you how we executed this on the Russell. And for this bar here, we had a buy, a plus buy in the S&P and the Dow. And these markets are so correlated, we could have executed in the S&P or the Dow or the NASDAQ or the Russell. And I'm showing you how we executed in the Russell. And we had one bar up here, nice standard plus trade. The stochastic's not telling us anything. It really made a sort of a cranky false bottom there, didn't quite get down to where we'd want it. You could have, if you wanted to, trail the stop. Or you could have exited first profitable close, $1,900 in that trade. From this next bar, nothing happened, and for this nasty outside bar, we had a plus sell signal. Now, outside bars are a fact of life. You have to learn to deal with them, and do not be frightened of them. This is a lesson in if you just stick to your knitting and stick to how we trade these signals. The market will sometimes hurt you, but it will eventually give that money back to you and reward you. And so here was your sell signal. It was elected down here, and then you got this outside bar. Now, on any day of entry, we have a standard stop and reverse if you get an outside bar. So 2 ticks above the entry bar, you had your stop loss, and you also had your stop and reverse right there. So at this point, about where this little arrow is, you had to close out your short position and go long. And that's how you do a stop and reverse. And you can exit first profitable close, which gave you a loss of $1,600 on the short trade. And the market gave you back $480 on the long trade. If you wanted to hold that longer, you could have still been in it today. But the standard way is to deal with that. And even though this is a bit nasty, and these outside days always sort of annoy people, hurt your equity balance, that trading gave you a net $760 profit from the 2 positive trades and the loss. So the point I'm trying to make to you is if you stick to how the rules of how to trade this stuff, it won't hurt you. I won't say it can't, it can, but if you just, most people, I guess, took the short if they did and then didn't do the stop and reverse, you got for almost $500 back to soften the blow if you took the stop and reverse. So there are reasons for why we do it this way, and there's the ugly chart. So David, yes, of course we do have ugly, and we're aware of that, and we have techniques to deal with that. Okay, moving on, I wanted to show you, in the previous slide I said I was going to show you the ups and downs of this is Forex. This is not Forex. This is the I'm putting a page over the top of the PowerPoint, which you can see now. This is Forex. This is FractZen. Too many F's in here. This is FractZen for futures. And a lot of you are doing trials on this now. This is the printout from our monitoring VPS that's running this thing. This is all of the trading from January the 1st, which was markets were largely closed for that day, all the way down for the whole of January. Now, let me show you what's happened, and I'm getting lots of people saying, oh, this thing's losing money, this thing's losing money. In the same way as we get pretty trades and ugly trades, we get winning runs and we get losing runs. And I was telling you the story about at the beginning of this webinar about how as political creatures we're getting much more short-sighted about our tolerance to politicians when we're not happy with them. And that's a disease that traders have had pretty well forever, that we give people trials and we say you're not going to learn anything about the profitability from the trials, that you need to take a much longer view before you'll really understand how these markets work. And then we have a week or 8 or 9, 10 days of drawdowns and lots of panic and lots of people, oh, this is losing money, oh, blah, blah, blah. So take a slightly longer view. One of the things about trading is that where you start your trading is very important to your early results, which is why when you see these advertisements for, I made 3,000 pips in Forex or one thing and another, when you look at the example, it's usually right because they tend to pick a period where they run into some good trading. But the reality is we have good results and we have bad results. And if you're looking at short-term returns, you're not getting the picture. Now, the last time I spoke to you about FractZen was on this date here. You can see the dates are over here. This was January the 16th, was the last of the data I used before the last webinar. And at that stage, for the month of January, we were plus $12,000 on these 8 markets that we've released to you. By the time we got to the 27th of January, we were plus $15,300, which is when, unfortunately, a lot of you started your trials. And since then, we've had about an $8,000 drawdown, and January finished with a profit of $6,547. So that's what happens in trading. That's just called reality. You're not going to get a proper view of what markets do in a week or 8 days or 10 days. You need to have months and months to understand how this stuff works. But having big and savage drawdowns is not the end of the world. It does happen. And if you look up here, you can see an even bigger big and savage build up. So the run up is just as savage as the run down. So this was the first 16 days of the month, and the first was a holiday, so it's 15 days up, made 12,000, and then in the last few days it's had a big drawdown, but we finished up netting $6,000 for the month. So I just wanted to show you that so you understand how markets returns rise and fall. I say at every webinar, there is no such thing as straight line earnings. We'd all like these markets to go on happily and earn 1,000 or a couple of thousand a week or whatever it is that your aims are, and do that every week. It does not happen like that. Volatility means that returns go up and they go down. And if you're looking at a short-term view of this stuff, don't let your highs be too high and don't let your lows be too low. In other words, don't get too excited when you get a big run up and start increasing your staking prematurely, and certainly don't be depressed when you've had a run down, because that's just called reality, and that is what markets do. Okay, so I wanted to make sure you all understood that. So let's have a look at how do you know to, what's this, a question from Brian? How do you know to exit the first Russell trade on a plus signal, but you held those trades on? It's the position of the stochastic I was talking about there, Brian. You can do either. There is discretion in this. The point I was making was that some of these plus trades come for purely technical reasons. That is that the turn has already occurred on the high-low basis, so they can't be a TO3 signal, but they are a TO3 signal in all other intent and purposes. If you look at the stochastic and make some value judgment about that, then there can be an argument for holding those trades a bit longer. Let me see here what is happening. I've lost my slideshow, and I wanted to get back to here we are. So let me see if I can bring that up again. You should be able to see this momentarily, folks, and we wanted to tell you a bit about Forex today. We've been running Forex in FractZen Pro for many months. The delay has been a technical one, that all of these trading platforms for Forex handle the bid and ask situations differently. Some of them used to show bids and ask as last trades, which is what the program's looking for. It's looking for the last trade. Other programs, other platforms, I should say, and I think Gain Capital is one of them, don't show them as last trades. They show them as bid and ask. We've had to overcome that technicality to get the program to read the bids and asks in the same way that it was reading what was called last trade before on the earlier types of platforms. And we're doing that now. That seems to have been overcome. And the next issue is that the various platforms treat volume, excuse me a second, treat number of contracts differently. For some of these platforms, 1 means a mini. For other of these platforms, 10,000 means a mini, and 100,000 means a normal full-size contract, which itself will be called 1 on other platforms. So Trade Navigator have been ensconced in trying to write the enablements to handle those differences. We really want to get this released to you now, so what we've said is, look, just go ahead and get it working for Gain Capital for the moment, which is the bulk of our clients are in the US, and we'll trade with US brokers. Gain Capital is one of the big ones that does have the Trade Navigator back end, so we hope to be in a position to release Forex to you very shortly. These are the results for the last 6 months to date. These are the markets that we've are in our test group. As you can see, there's a whole lot of them. Some of them are pretty outstanding. CAD Chief, there's a reason for that. It had the very big trade from the collapse of the Swiss franc, or the strength of it really, and you can see the large win in there, but even if you take that out, it's still got the highest win percent, and its average win is very strong, even if we took out the big hitter, which we had. So it's very good. GBP Chief is very good. GBP JPY is very good. USD JPY is okay. Then you've got the other JPY pairs are all okay. And as we move to the bottom of the list, these are markets that are probably not that exciting. Remember, you're looking at 6 months here. You know, when you're getting down to 3s and 4,000 over 6 months, that's not really a good return. So the question is, can we pep those up a bit? But in the meantime, we certainly have probably 4 or 5 markets at least that are certainly worth looking at and releasing to you for trading, which we hope to do soon. Brian asked this question about pyramiding, and this is what it does. I wonder if I can go back here. You used to be able to. This doesn't seem to have it on. I just showed you the previous 6 months without pyramiding in the normal way you would trade. And I think we had net of about 90-odd thousand, 93, 90-something thousand. This is what happens with pyramiding, that as you get additional signals, you add an additional contract. and you can see we've jumped the net profit from 90-odd thousand to about a bit over $250,000 for the same 6 months. Now, this is still a base of one contract, but it adds additional contracts as you get additional signals. For some of that, you've already got profits in place, but you do have to keep finding margin. So this is something that will suit a prop trader or someone who's managing money, who has access to sufficient funds to trade multiple contracts. And that pyramiding function is very, very exciting, as you can see. Just it's the way to make a ton of money very quickly. And that pyramiding function is already built into FractZen, but it is not switched on at the moment. It's not something that most of our clients would want, but if you are interested in having that function available, if you're in the position that you could use a pyramiding type of trading, more than supercharge, you hypercharge your profits, do drop me a line and I'll be happy to talk to you about that. Okay, so that's the end of the PowerPoint, which means we can start looking at charts, folks. We're going to have a fairly long session today. I'll try and keep to the hour. We might be a bit over. As usual, ladies and gentlemen, we have free trials to everything. We do not do any marketing other than tell you what we believe, but it's up to you. Have your free trial. Make the decision for yourself whether the particular product is suitable for you or not. So that's that. That's the main stuff that I wanted to talk to you about away from the charts. So what have we got here? Let me see if there are any questions we need to deal with there before we move on. So-and-so. How big an account would you need for pyramiding FractZen? Depends how many markets you want to trade. We can talk to you about that. Drop me an email if you're interested. The point is about the pyramiding is that we can set a limit on it of how many times it does pyramid. But it certainly is what how pro traders trade, and a lot of very sophisticated programs use that. If you've got a winning strategy, Danielcode strategy, then of course the longer you trade it, the more money you make. And if you're pyramiding, you're just gearing that up. It's a very high-powered way of making a whole lot of money as long as you've got the capital to handle it, and the program is robust enough to do that for you. Okay, so now let's talk a bit about, go back and have a look at some charts. Any questions, guys, keep posting them. I'll get to them all. We wanted to look at softs a bit this week, and these are also agricultural products. And David, you wanted to look at some sugar charts. So we're starting with sugar. As you can see, there's been a pretty wild piece of volatility in sugar over the years. This is our long-term, this is our 24-day chart. And it's run from 9 all the way up to a dramatic high of 36. Lots of volatility historically in this chart. That was the high in 2011, and since then it's just been wending its way down. Interesting points to note here is just how this market has found the Danielcode numbers. Now, this is not one of the really good technical markets that responds to the Danielcode numbers, but it still does in a slightly different way. As you can see from this big high here, we had this big rundown. Eventually it found this first Danielcode number at 1876. Now, each of these bars is about a month. This is a 24-day chart. So this caused nearly 2-month rally off that support. Then it wandered down, didn't quite find the next number of 1551, rallied back up 3 months. Down it went, and then it found this number again on the close. And you can see how on this bar it slipped through the 1551 number, came back to close above it, and then the next bar put its low almost right on it and ran up to the old number at 1876. So it tested that number from the downside. From the way down, it tested that number 1876. From the upside, on the rally back here, it tested that number from the downside. and that's how the Danielcode numbers control markets. They will test these numbers both ways, and if you've got your charts up to date and you've got your Danielcode ratios on them, and incidentally that's in the Danielcode library of studies, all of that is free for all members. Hey, there's Shifty's arrived. Hello, old mate. How are you? Right in the centre of all the political drama down there. You must be enjoying it all. It's all rather amusing. So down this thing came, and it just breached the 1551 number, which means the vast probability is that it's going to finish up testing 1141 down here. So there's our very long-term chart of sugar for you, David. Let's have a look if we've got a sugar chart. We'll come back. We'll do the S&P. We'll do gold, folks. Don't think I'm going to leave you hanging over any of that. Here's sugar on the 12-day chart. You can see it's just been having a very orderly progression as it's run down the Danielcode trading channel. We're still holding this important first low here. So that's a valid channel. You can see how sugar's got stronger. It was running along the bottom channel. Then it had a little break to get over the median, went down to retest, back up to the absolute high. I told you how it tested 1876, the Danielcode number from underneath. That also happened to be exactly the top of the Danielcode regression channel. Is that a coincidence? No, because they're created from the same numbers. The variance in the Danielcode trading channels, one standard deviation is actually 1.593, which is 559.3, of course, is the dominant Danielcode number, and that's the same set of ratios as all of these retracements and blue lines come from. So it's all the same thing, just shown a different way. So no surprise there, but it's a great way to understand how these Danielcode numbers are so vital. And since then, it's holding support at the median, had a little quick break, got back, holding support at this median, and it just continues to slip away. It can find support from the median, but the probabilities are this goes down to that 1141 number before it finds any serious support. Here's a 6-day chart. That's gold that we're going to come to. Let's finish off sugar here. Nothing very much exciting to see on sugar, except what we have just seen. Here's the last important high in February. We can run our trading channel from that. We could either run it from that or the this little high bar before. Simplest way is to just run it from the highest close, which is that. We can see it coming down and coming down and coming down. And if we run this all the way, we finish up with a pretty simple, straightforward trading channel. Shows you much the same thing. Break of the channel here. This probably went to 1.5 times. Newton's law, any action has an equal and opposite reaction. So it goes, it went 1.5 times through the lower first standard deviation. Means it'll do that on the upside. It did that exactly. Since then, it's just run down the trading channel. Found support at 1 SD here. Also happened to be a red line retracement, Danielcode number. Wandered down, still following the lower 1 SD. Rallied to the median, went to the upper trading channel. See how precise this stuff is? Then went down again. Where did it go? Didn't find a Danielcode number, did find the bottom of the Danielcode trading channel. Same thing, rallied again, got to the top of the standard of the 1 SD, 1 standard deviation on the Danielcode trade channel, broke through that to find the red number at 1876, and down it came. Same thing, bit stronger at the low, turned before it got to the bottom of the channel, rallied up to the high, turned before it got to the high of the channel. So it's just been completely ruled by these Danielcode numbers. So let's see what we've got. We've got a few questions here. We'll come back to all of these. And you can see now it's just trying to hold the median. It could rally from here. It's got a habit of rallying up to that 1 SD and then going down to find its next Danielcode number. That's the highest probability. We go back now on the, we always go from our slowest chart to our fastest chart, and this will be coffee. which I thought you might be interested in. It's a terrific trading market. I think you saw I showed you a chart of this week's trading in coffee. Just made a lot of money. Very nice. Here you have the trading chart of coffee. I'm not sure whether this is Robusta or the other one. I saw a interesting documentary on growing coffee a couple of weeks ago. I didn't realize there were so many different varieties, but Robusta is the common one. It's grown Vietnam and Brazil are the main growers of that. This is probably Robusta. The other ones trade to premium or discount. Robusta always a premium. And it's had a big collapse from a dramatic high. Very much the same sort of thing as sugar. This is the CBR cycle working. All these commodities had a big correction, and this rallied from its low, found the Danielcode number. This is the 59.3 number. And I assume, let me see, it might be the 62.5. No, it's the 59.3. There it is. And found that, and it's still there. If we wanted to know where support was, we'd go over here, find our little logo for Dan the Hedgehog. That's what that spiky thing is. Put our tools on here, and we'd find that it's correcting 50%. Very common number. It's trying to hold the 50% support of that major swing. Markets that are going sideways tend to keep going sideways. Nothing too exciting about that. We'll have a look if we have anything on the 12-day chart. Just got the same thing on the 12-day chart, David. Nothing much different there. And 6-day, same thing. All the charts are showing you exactly the same thing. It's in a trading range. It's got Danielcode support underneath. And above. A shift reckons Abbott's going to survive and prosper. I don't think so, mate. I think he might well survive this next week, but I think the damage is done, old fella. And of course, I don't know how you felt about him giving the knighthood to Prince Phil, but it was fairly ridiculous, wasn't it, mate? Okay, so there's coffee for you. We've done coffee. We've done sugar. We wanted to have a look at the energies, so let's have a look what oil and natural gas has been doing. Natural gas is just really, really weird what happens from an economic point of view. Here's oil. We had very strong support right here at the Danielcode 74 retracement at around $54, and we had two fourth and fifth seal lines intersecting there, and that held it for a month, and then we got this quick breakdown to just above the black line, 42.49. These sort of dramatic falls like this, if they're going to have any legs, you can almost bet they'll react at the black line, which this one did. In fact, it reacted a little bit above the black line on the 24-day chart. So where does it go from here? Well, it's been a very dramatic and very fast move. It's really overdue for a period of consolidation before it decides if it's going to break through that $42 line. And if it does, there's plenty of downside, and at some time, I don't know, it all sounds too dramatic to me, but there is a fourth seal line down at about $23, $24. Hank, Shift, Hank wants a wager with you. Shift has said Abbott to survive and prosper. Hank, just remember here, good bloke, says he'll have a wager with you. Oh, thank you, Pete Townsend. Robusta and Arabica, is it? Arabisa. I don't know quite how to say that, but that's the better quality coffee that you drink in the joints where you go and get a nice little cup of coffee. Okay, see, our guys know everything here. So Shift, let me know whether you want to get on with Hank. He wants to take the other side and say that our esteemed, or not so esteemed, or rather foolish Prime Minister is a dead duck. Okay, so that's oil. We looked at, there's the big contract. Let's go to the 12-day chart and have a look at oil. Here we are. Look at it. Just dive down to that black line. We've been talking about this all the way down. You've had these numbers Just look how it keeps reacting. Here's this bar. This was back in September. It stopped at that Danielcode 9069 line. Then it broke through the next one. It stopped at the 50% at 74.19. It just stuck its head back down through the 54.52. 2 weeks later, it's just back up to test that line from underneath. And now it's made a good attack at the 42.49, scared itself and having a bit of a rally. It's certainly overdue for a rally. We should see some sideways consolidation is the highest probability in this market for oil. And have a look at this, guys. This is the 6-day chart. You've seen this. We've had this here for you for, months and months. You've seen this many times. And here it is diving down like a demon straight into the fourth seal line, not once, but 1, 2, 3 times. And now that's the fourth seal line that's actually turned oil around and got it running back up towards the 54 market. Natural gas is of great interest to me because let's start with the biggie if we've got something on it. This is just a strange situation. Australia is about to become the largest natural gas exporter in the world with all of these new fields coming, particularly the ones up in northwest Australia, off Barrow Island, around that area, and the North Queensland natural gas fields, which are coming online too. Australia is about to become the biggest natural gas exporter in the world, and it's getting between $14 and $16 per whatever the measurement is, thousands of cubic kilojoules or something these days. I don't know what. I was educated in the feet and inches and pounds and stones days. So thank God America at least has kept some sanity with their measurements. But this is a product that's selling internationally for $14 or $15. But in America, because it's not exported, it's very, very depressed the prices. I have long thought that surely the commercial interests are going to find a way to export this natural gas from America, which has massive, massive reserves. But I think politically, because gas is such an important fuel, domestic fuel in America, there's a very strong urge to keep these prices suppressed, and they're doing that by not allowing export parity pricing, as they call it, which, in my view, that's sensible anyway. So that's all right. Now, guys, we just need to, we're about to run out of our hour. Let me quickly, let's update you on the ones that most of you follow, which will be the S&P. Here we are. Let me go to ES, might be a better chart. No great dramas here yet. This is the S&P. This is the futures chart, and it's still running along, tracking easily enough up its Danielcode trading channel. It's breaking one standard deviation, trying to get back to the median. Hasn't quite got there yet. 2100, incidentally, was the price that we said it would be at in December, and it got to 2088. 75 wasn't too bad, I guess, which was back in March last year. Let's have a look at the 12 is probably the best for this chart. So here it is. This is the S&P. This is actually the index, and you can see that this is still very orderly. It's been bouncing off its fourth seal line. It's found overhead resistance there, and it's also found resistance to the one standard deviation. Little tiny correction for the last month or so, but it's still holding the median. That means this market is still strong. I'd start to worry about a break on the 6-day chart, but we're certainly not seeing it now. So this market, the trend is up and remains up, as we've been saying since March 2009. So no change there. So let's now look for all you gold bugs. Let's have a look what gold is doing. We like to keep up to date on these important markets. And here's gold. Some weeks ago, some months ago, we told you about this 62 Danielcode time cycle and also the fourth seal line there, which would give support, and you could have find this every week updated under the fourth seal coverage we do at the Danielcode website. You really should look at that stuff, folks. If you use that as your trend indicator, you'll more than double your profits, your trading profits. So we got this perfect turn at Danielcode 62, which is the most common number for support for lows on time cycles. And we also had a fourth seal line there, which marked that turn pretty nicely. And look at the verification of that. You've now got that low bounced off it. This low here broke through it momentarily and reversed like a mad dog. And the next low, the following fortnight, put its low exactly on that fourth seal line, just to show you that that's what it was doing. Where did it rally to? Well, if you'd used your Danielcode tool, which is this little guy over here, this is Dan the Hedgehog, and you put your retracements on the charts, you can see it went straight to the 59 retracement there, and which also, again, happened to be the top of the DC trading channel. Why is that? Because all of these Danielcode tools are created from the same set of ratios. Okay, so that's rallying. What's it do now? Look, I suspect this is an important low, and I suspect that gold should be trying to take out this high here at 1346, but it's got a bit of work to do. It's taken a battering. It's going to take time to build a base if it's going to rally from here. But we'd want to see, the first sign we'll see is a close outside this one standard deviation. Now, remember, we had not quite two standard deviations here, and that we've had consistent support on this Danielcode fourth seal line. Very strong. Also got the right time signal there. That could be, well, it is already an important low in the market. Where it goes from here, we'll see. We can just briefly, for our gold friends, have a look at Harold. I know you always like to see this closer chart, which is looking like an absolute dog's breakfast now. I've got too much on here, but here's the same thing. Here was our low. I'll take all this historic stuff off. You can see how this market is completely dominated by the Danielcode fourth and fifth seal lines. If you'd like to know how to create those, come to a tutorial. I'll be happy to teach you. It is quite the most amazing stuff you'll ever see. And here's gold. It made its low at the Danielcode fourth seal line and on a 44 cycle, which is gold's number. 44 is the vibration for gold. And the 62, which is our general purpose number for lows, time cycles. And away it's gone. Where did it go? Well, if you put your retracement tool on from here, which you should all have, bang, straight to 1309. And that was the next target there. Okay, so let's see what we can see. What we've got some questions here. Just let me deal with those, folks. Okay, let's have a look. What have we got? So, I always like this part. Okay, so where were we up to? Eric, do you stop and reverse only on entry day or for the validity of the entry signal? Yeah, the day it's elected, Eric. On any day that a trade is elected, you have an automatic and mandatory stop and reverse on the day of entry only. Good question. Okay, what next we've got here? This is a question. It doesn't say who it's from, and on the flow charts on the website, it's talking about 720 and 240 minute bars. We used to do that. We had a bit of interest in short-term trading or shorter-term trading, and we used to trade off 240 and 720 minute bars. We don't do that now. Because exactly of the problem you've raised, that you can often be trading what turns out to be an inside bar. A much better option. In fact, I'll take that stuff off the website when we get around to cleaning it up. A much better option if you want to trade short term, trade the FractZen signals. In fact, we will eventually get round to putting a filter on FractZen so it trades only in the direction of the TO3 and plus signals, which might be very interesting, but that could be 6 months to a year away. Yes, so just ignore that for the moment. It's not a great way of trading with the other tools we have here. FZ Pro for the World Cup Trading Championship. Shift, yeah, yes, I'm going to do it. Shift. The next development we've got coming on FractZen, I don't know when we're doing it. It'll be very exciting. Is we're teaching it how to create its own signals without me having to set the macro parameters. Once we do that, it'll be pretty interesting, and I'll tell you all about that. Trey, what is the second standard DC standard deviation? Trey, let me show you. Let's just find a chart that's jumping up and down a bit. It's created automatically. Let me get rid of some of this stuff down here. And when you use this tool tray over here, it's like an S with 2 lines on it. Trade Navigator call it a regression channel best fit. When you draw that, if you've got the settings in properly, it will do it automatically now. If you keep using this and keep dragging it forever, all you finish up getting is a regression channel, which is meaningless. It doesn't mean anything. You have to follow the rules that I've set out, and in a down run like this, you have to maintain contact with this first down side and one other point. And it's the first down thrust or the first up thrust that is vital. If you don't maintain contact with that by stopping the regression to the trading channel moving, it is no longer a valid trading channel, and you learn nothing. There is a webinar. If you go to the tab under webinars on the Danielcode website, there is a webinar called Danielcode Trading Channels. It's a whole hour of how to create these things. But the simple answer to your question is that if you've got the settings right, and the settings for all futures, when you open up this thing, it asks you what your standard deviation value is. In a normal trading channel, it's 1, but for the Danielcode, it's 1.593. And you have this drop-down box. You can create a different number of channels. So to get to 2, we just double it. Okay, so that's all automatic. And you can see down here, this market ran perfectly down this trading channel. At this point down here, it reversed. There would have been a Danielcode number there. And off it's gone, and it's obviously past 2, which means it and closed above 2. That means this is completely finished. This trading channel, it's doing something else. And you'll see there'll be a small trading channel up there, another one down here. But Trey, that's how you get 2. Okay. C is pronounced, this is Pete, like K. Oh, this is the coffee. So it's Arabica. Thank you, Pete, you're font of all knowledge. This is Shift. Hank probably wants Gillard back. No knighthood for Hank. Hey, God, I wish you shouldn't get me on the question of women in politics or women in general, but I mean, the thought of Julie Bishop. The press just laud her. She's so wonderful. She's so elegant. She's done such a great job. She's a bloody foreign minister who's done absolutely nothing except swan about in Chanel clothing. They're obviously overpaid on the taxpayer's dollar, and I mean, I don't get it. You know, she's a woman. She's reached an age that she's long gone out in the broodmare paddock, and that's usually the one right at the back you can't see. Oh, Bishop. Okay. When we meet at the tutorial, this is David. Asked me about time, uncle, a pastor, rabbi, father performed a service your part of the world for the royalty. Oh my goodness! Look, David, I used to be a royalist. My family are British. My father was a Royal Naval officer, and he was, you know, right to the bootstraps, king and country as it was then. But you know, I mean, honestly, as I've got older, it really is a ridiculous bit of nonsense for us. You know, I don't know why there are still monarchists in this country. They're a great institution for England. They're a great tourist attraction. They do, until now, they have set, you know, wonderful standards. It's great to see the Queen and her behaviour, and the standard she sets. But I mean, look what we've got coming up. Charles and Camilla. I want to see who's still a royalist when they accede. Okay, David. Yeah, DC channel. It's my kids would say it's the bomb, baby. Whatever that means, but that's what they say. Trey, you're welcome. This is Chip. Hi, Chip. Any updates on Frank's result progress? He's done very, very badly, Chuck, and I think he's very disappointed, and so am I. And really what's happened there is that Frank runs a farm, his family farm, and he's a terribly, terribly hard worker. And amongst other things, they have a small contracting business. All the farms in Belgium are tiny. We would call them, I mean, they think 30 or 40 acres is a farm there. And we would sort of call that a pretty small paddock. But they have a very, very fertile soil. They do, very intensive farming, and Frank and his family have a spraying business that they do contract spraying for all the farms in the neighborhood. Frank won't mind me telling you this, I'm sure. And the deal when he asked me if he could use Danielcode to enter this World Championship was that he was selling that business and becoming a full-time trader, to which I agreed. That subsequently didn't work out. His family was against that, so he stayed on the farm, working very, very hard as he does. He's a very, very diligent person, Frank. Good bloke, and honouring his family and their requests. So he works on the farm till about 8 or 9 o'clock at night, comes in completely exhausted, spends an hour or so maybe with his baby daughter and his wife, and then thinks he's going to start looking at the trading charts at 10 o'clock at night when he's exhausted, and he thinks he's going to compete with full-time professional traders. So that didn't work out, and it's disappointing for him. It's also very disappointing for me, but anyway, that's called reality. Okay, what have we got here for Mike? Hello, Mike. How are you? Nice to see you here. S&P hit a second standard below the mean a few years ago, not hit the 2 on the yet. The fact, first 62 cycle on the 24-day chart, a major low, I might add. Do you think that S&P will make a run to second standard deviation upside off this first iteration from such a major low? Look, it will, Mike, but we don't know when. And let me think about that a bit more. It's a really good question. I need to update the chart to look at that, and I will have that answer ready for you at the next webinar. David says, yeah, Frank is a great man, and also says, bummer. That's quite right. It is a bummer. It's a bummer for him. Very, very disappointing because he has the tools to be highly, highly competitive in that thing. I don't know who this question's from. What happened to GMAG Pro? I don't know who that question's from. Is it a follow-on, David, from you? We had the pleasure of having Tim Birch with us at the Waiheke tutorial about 15 months ago. Was it Shift for 15 months ago? Something like that. Anyway, he's the head of programming and development for Trade Navigator. He's also a director of the company, and he came and sat in on our webinar, and he was very good, very well behaved, unlike some of our mates out there. You missed out on all the fun, but a lovely bloke, and he gave us an undertaking. He was so interested in GMAG Pro that he was going to put it into a strategy for us. And with the pressures of work, that didn't get done when he suspected it was. But I actually have an email from him today saying he has it now in strategy, and I should have that for testing next week. So that's a pretty timely question. We should have that ready for testing in the next few weeks, running as a strategy. A lot of this stuff that we've had in using TSOGs hasn't been the best way to trade, and this strategy package that Tim's invented and developed is a much more stable and worthwhile platform. Okay, Chip, yeah, that's his story. He's a great guy, and he will do very, very well. He's a brilliant trader, Frank, but I mean, you know, new wife, new baby, working the family farm, coming in exhausted, and then thinking you're going to compete with people who are doing it full time. just can't be done. So I hope he'll have another go at this when he maybe at another stage in his life when he does have the time to devote to it. Yeah, good. Okay, tutorial question, April. David, April, we're looking for, I've been talking to Jerry Winter about it. We had a webinar a few years ago at the Garden Hilton in Los Angeles. It's a place called Manhattan Beach, and it's only about 12 minutes from the airport. It's very, very nice. It's a small Garden Hilton. It's got a great outside bar, restaurant, inside one as well. It's very intimate, very nice, and a very nice area of LA, low key, fantastic, super convenient. The hotel bus picks you up at the airport, takes you back to the airport, and we have had great fun there. So keep your diaries clear for the end of April, guys. We'll be doing a tutorial in Los Angeles. Yeah, well, I talked to Jerry about it. He said it's always nice in LA. And April should be pretty nice there as well. Okay, guys, thank you for your attendance today. I'm sorry that, as usual, we've gone over time. Had a lot to talk to you about. Do enjoy your weekend. Get some rest. Next week we'll have another big week, and I'll look forward to seeing you at the next webinar. Okay, thank you, guys. Thanks for your attendance, and good night.